Welcome back. Capri Global is the company which is on our radar. It's an NBFC which provides loans to MSMEs for construction finance, affordable finance. They also have a Vishwas scheme which is running, which gives loans to women in the age group of 18 to 45 who've been running their own enterprises for over a year in the rural and semi-rural areas. But the news for which we're calling the company is yesterday the company announced a tie-up with Union Bank of India for co-lending to MSMEs. To discuss this, we're joined by Rajesh Sharma, the MD of the company. Mr. Sharma, morning, and thanks so much for joining in. Could you elaborate a bit more about this tie-up with Union Bank? What is the kind of AUM that you're targeting, and would you look to tie up with more banks?
So we have tied up a very important agreement of co-lending with Union Bank of India. Union Bank of India currently have 9,000 branches and a large bank. So with our 100 branches plus, we wanted to cater to MSME customers. In this co-lending arrangement, RBI has notified that 80% of the amount will be given by Union Bank in each loan we do together, and 20% will be by us. So it will be basically a marriage between the low-cost fund of Union Bank and our low-cost origination and better collection efficiency. And by this, I think bank and we can cater to those customers who otherwise cannot access to the banks. So this is going to be a very strategic move in terms of this is going to address the long-term funds requirement from the bank. Once you deliver on the performance, I think capital and debt will not be a challenge anymore at a competitive pricing. So with this, I think we will achieve a growth target which we stated between 20 to 27% for next 4 to 5 years. And more than that, I think this will not require any more capital. So this will be ROE accretive, and this will give a boost to our catering to those customers also otherwise which we could not have catered to because of the price competition. With Union Bank, with our partner, even the pricing front, we will be able to compete with all the competition which we in the segments.
All right. Good morning, Mr. Sharma. This is Pavitra. Thanks a lot for joining us. Sticking with this agreement, if you could just tell us what is the kind of cost of funds that you see for this agreement, and also what is the split that we're seeing over here for spreads?
So cost of fund will vary between 8 to 9% depending on the customer segment. And suppose we are lending to a customer, say 13%, 12.5%, the balance spread will come to us. So bank will charge a particular rate of interest for a particular kind of a customer, and the entire spread will come to us. So and that is how it is built. Basically, we'll continue to what we are doing, but instead of taking the term loan to finance those lending activities, Union Bank is coming as a partner in that lending activities. It's a big move. They are going to take 80% share, whatever in finance, within the agreed underwriting policies.
Mr. Sharma, we'll have to leave it at that. Short conversation, but an important one. Thank you once again for joining us on Cnbc TV 18. Need to slip into a very short break on that note. We'll come back with